We only do our own deals now. And there was a crawl, walk, run period. We were doing deals with other sponsors that were specialists in the field, which helped us learn their practices. Like we worked with this brilliant, multifamily operator in Connecticut for many years. And working with them and understanding their process helped us before we started buying our own multifamily assets. And that was the first thing that we started to own or operate ourselves within Austin. And then with other best-in-class operators in storage and in office and you name it. Like that was the way that we started, but in looking at their documents and working with them and exiting and seeing the pitfalls and the quarterly reports. And, it really helped us get smart about jumping into this, that heightened responsibility of running your own projects and running your own management companies. And, but taking the time to really get them right. And now they invest with us. I mean, Related Fund Management, which is arguably the largest real estate investment firm in the country, is our LP in one deal. So meaning when I say that the smartest investors in the world are our LPs and we're the sole GP, that's not a joke. And in those structures, we can do the same 90-10 equity. We use our balance sheet, put in 10% of the equity. We'll be the sole signers on the GP. And then these larger groups, these first responder, firefighter groups, will come into projects and or through one of our multifamily funds or whatever the structure looks like. At the end of the day, the things that stay the same is we invest in our own deals, we don't charge upfront fees, and we are rewarded in some instances handsomely compared to other groups that might have this 80-20 structure. We get a 50-50 promote on a lot of these deals, which on its face, I hear other operators say, oh my God, a 50% promote's a huge number. But if you read the fucking documents, you say like, yeah, it's a 50 promote, but I only get the money if I knock the cover off the ball. And if I don't, we're left holding the bag. And so we've looked at these structures through different lenses, depending on, what the investor needs are. Are they income producing needs? Are they more long-term value creation deals? So we've been agnostic about the types of deals that we do because we're so centrally focused on the markets, to where if we believe in a market, we can get to a place where we can understand industrial, where we have an office building under construction in downtown Austin right now, a boutique office, 24,000 square feet, balconies, staircases, unbelievable, impeccable location, where these larger corporate offices that are downgrading their 300,000 square foot footprints are wanting smaller footprints. So it fits the market because we believe in the market and we believe in the macro of it, as we do so much in a lot of the Sunbelt cities. And we see cities like Raleigh and Dallas and San Antonio, Austin, all within this golden triangle, certainly. Houston is a little bit hard market for us because so much of what we do is about zoning. And that goes back to maybe my law background, but, seeing what projects could be, not necessarily what they are on their face. And in Dallas, we own a project at 1899 McKinney Avenue, which I would argue is the most important piece of real estate in the entire city. It sits on a triangle, it's on an island, it's at the 4-road intersection of Akron, North St. Paul, and Cedar Springs. Goldman Sachs' new headquarters is across the street, under construction at the moment. Deloitte just put their new office there around the corner. Cuban selling the Dallas Mavericks to the Adelson family. I think there's a big case to be made that casinos are coming to Dallas or coming to Texas as a whole, which we can be right prime for. But it's about looking at the market more than anything, because so much about real estate changes on a corner by corner basis. So you can say, oh, this market is strong, but you walk down the street and you need to underwrite and understand the fundamentals of a very particular corridor, not just looking at the city. So I think when you look at the averages and the fundamentals of real estate on a national average standpoint, I don't think you could be more misrepresented, of saying, oh, the average is this, or looking at the market in New York City versus Dallas, or looking at LA versus San Francisco is such a misrepresentation of what the markets are doing, that you need to really hone in on micro economies or pocket communities, even from a 10, 20, 30 mile radius, and then within those places. And I think that's what we've done really well is, learned how to walk the neighborhoods. As we're going through zoning process, taking 50, 100, 200 meetings with landowners, condo owners, other operators, and really understanding what's happening within those markets so that we can provide a product that is the need of the neighborhood, not what we just think is a good deal. So what we find to be a good deal ends up being a need that we're fulfilling for an individual community. And then in doing that, you find that when you're fulfilling the actual need, the community gets behind you. And when the community gets behind you, you start to see, zoning changes that were unfathomable, for other operators. And I believe it just had to do with not listening as closely as they could have, because at the end of the day, I am not a money worshiper by any stretch of imagination. We've done very well. We've made our clients a lot of money over the years. And, as a 41-year-old CEO, I'm just getting started. This is the greatest value opportunity I've seen fundamentally, historically, in my own lifetime. We have $2.2 trillion of debt that's maturing over the next 18 to 24 months that is going to provide unfathomable buying opportunities, development opportunities. We're on this precipice of a change of what home ownership is going to look like for ordinary Americans. And there is a way to capitalize on that on such a profound level that I'm on a video call with you. We don't have a great need for capital per se. The pensions back most of the money, but this is a point in my life where I want real Americans like me to be able to capitalize on these opportunities and not just leave them to big institutions, and creating this marriage between the institutional investors writing the big checks per se, but being able to chop up these co-invest opportunities of 25 grand, 50 grand, 200 grand, $1 million from 401k rollovers, IRA rollovers into something profound. Where the little man like me finally gets to capitalize on these opportunities.